Good afternoon, all. Thanks for joining us today for Stable Stories. Stable Stories is a video series that explores the behind-the-scenes experiences, learnings, and insights of builders pioneering in the stablecoin industry. Today, we have Daniel Lev. He is the co-founder and CEO of Coinflow. Coinflow is a payment platform focused on making global payments move at lightning speed. Welcome, Daniel. Glad to have you here. How's things going?
Things are good. Things are good. This year has been, can't believe it's almost end of year. It's been pretty crazy and moved very, very fast.
Indeed, it has. They say that time is actually speeding up materially, so it does feel like that is in fact happening. Perfect. So let's jump in. Could you give us a little intro to yourself, to Coinflow, how you got started with the project?
Yeah, most definitely. I'm Daniel, CEO, and one of the co-founders here at Coinflow. As Dave mentioned, Coinflow, we call ourselves a next-gen PSP. We take in all sorts of different payment methods globally, so card payments, bank payments, e-wallets, crypto, and we instantly give merchants funds when those payments are accepted instead of waiting multiple days. If they use someone else, like a different bank or payment service provider, it takes them 2 or 3 days to get their money. We give them the money in T plus 5 seconds. And then from that money, which are stable coins, they can go and pay out their end users instantly across the world or move it to their bank account instantly. So receive money instantly, pay out money instantly. It's all powered by stable coins. I've been building in fintech for my whole career basically, and I got into the crypto arena, built a Web3 gaming company, scaled it up, and one of the key areas what we were pitching on was get instantly paid out when you win a contest, because that doesn't happen in Web2 right now globally. And that was all powered on stable coins, but end users, after getting a stable coin, since they didn't have that much utility or spending ability, want to get those stable coins back to their bank account. So we built internal tools to get stable coins back to their bank account. And we realized that building around stablecoin infrastructure is way bigger than the gaming space because money is the core root and revenue is the core root of any business. So we decided to sell that company and start Coinflow about 3 years ago. So yeah, been kind of like a stablecoin OG, been building stablecoin tech for the last 4 or 5 years.
So gaming was actually the impetus to starting to build in the stablecoin space.
Yeah, exactly. We had the value prop of the game. One of them was get instantly paid out. Our Web2 competitors didn't pay people out instantly, and when you win a contest, it's like instant dopamine, but you want to realize that reward. And stablecoins were a way to do this. But then when you get something that instantly paid out, but then you can't actually realize it because you can't take this to your bank account or you don't have a Coinbase account or exchange account, whatever, then it kind of defeats part of the value prop. So yeah, it was definitely an impetus. And then we realized like, whoa, like, getting money faster is a huge value prop for every business. And then you can build different flows of funds, different use cases on top of that core primitive, but you need the infrastructure around it to enable that primitive.
Definitely. Very interesting. I would assume that the motivations and incentives for gamers are very, very similar to those of the crypto natives. So the transition probably made sense.
Yeah, exactly. High overlap, but at the root of it, like we realized that you can just like step back and tell everyone like, hey, do you want your money now or in 2 days? And ubiquitously, everyone says like, yeah, we want our money faster. What's the catch? And it's like, no, there's really not a catch. It's just using a different technology.
Cool. And the first time we ask all of our guests, the first time you used stablecoins, do you remember?
Yeah, I got into crypto pretty early, and I remember like I think it was CryptoKitties or something, some NFT back in Ethereum that I was buying at like my college library, and one of my friends didn't have any Ethereum, and I showed him how to buy stable coins and send it over because I think the gas was less than sending an ETH over. So he bought it in like the college library, sent me the USDC equivalent, and I had ETH, so I just bought it. But yeah, that was like the first time that we saw that money transfer work. I was like, this is pretty smooth. I was like, this is pretty smooth. It's not as smooth right now as Venmo because that's what people use in the US during the college days. But I like stepped out. I was like, this is still early, and anyone can send me this USDC. It doesn't have to be the guy sitting next to me. It can be someone all across the world. So yeah, that was the first time I was like, okay, this is pretty powerful, but this is still early and a little janky. So we've come quite a ways on that.
Yeah, I have a few, for what it's worth, I have a few crypto kitties gathering dust in an old wallet somewhere as well. Yeah, maybe they'll have a resurgence or they'll have some sort of like vintage value at some point down the road. Nice.
Yeah, I hope so for the sake of my CryptoKitty portfolio.
Yeah, I'm not bullish kitties right now. Not that this is financial advice. Nothing's financial advice. Cool. So Coinflow. So the one of the stated missions of Coinflow is to solve global payment frictions. Wondering if you can walk me through some of the core use cases, some of the major friction points that like you're really focusing on solving for, and how you're trying to do that internationally.
Yeah, for sure. Like I said, revenue is like the core part of any business. So receiving your revenue in a few days after someone made a payment sucks. And it really sucks when you have to pay other people out. For example, marketplaces, like we use a lot of marketplaces in our lives. Amazon's a two-sided marketplace where you buy an item and there's a seller. I'll give you an example. We have a lot of customers that are marketplaces that are global. So like I'm wearing a watch. If I want to buy this watch in a marketplace, what would happen is, you can swipe your card. When you swipe that card, there's a bank in the middle. And what happens is, you say a Visa card, the card gets authorized and accepted by Visa. There's an acquiring bank. That acquiring bank will take 1 to 2 business days to settle to, in this case, let's call it watch marketplace, the watch marketplace. But on the other side, there's a seller. So first it has to settle to this bank. And then after it settles, so let's call it 2 days. Then, so now today's Wednesday. Let's say the settlement hit Friday. The seller needs to get paid out. Let's say the seller's in Europe, but the buyer's in the US. Then you send on Friday, which European banks already closed, you send a wire via Swift network, and that'll take 1 to 2 business days as well. If it's like, a successful one. If there's any issues, it'll take much longer. So 1 to 2 days, this is business days. So I bought this watch on a Wednesday. The watch marketplace got it on Friday. They send the payment to the seller on Friday because he wants to withdraw and get paid for the watch he sold. It gets there Tuesday, Wednesday, the following week. So that's like 7 total days. What Coinflow does is, as soon as card's swiped, we instantly settle stablecoins in 5 seconds to the marketplace. And the marketplace can use a split payment method. It can split the payment to the seller in that same 5 seconds. So the marketplace got paid, the seller got paid, and the seller can hit withdraw. Let's say they're across the sea. So in Europe and Spain, they hit withdraw. Coinflow can swap that stablecoin into euros and give it to their bank 24/7, 365. So now that seller got the money same day within minutes, and he or she can go spend it, buy more watches if they're like, if it's the core part of their business is reselling stuff, they need it for inventory. Either way, whatever they need to do with the money, now they have it 7 days earlier, which is a pretty big value prop. And the marketplace can probably upcharge a bit for providing such a good value of someone getting their money instantly. So yeah, that's like one simple use case of how money moves today really slowly for marketplaces, and how we can speed it up significantly. And marketplaces are a very, very, very big part of the economy. Like I mentioned, Amazon's a marketplace, eBay's a marketplace. Arguably, like Uber is a driver marketplace where I'm a rider, there's a driver, they match us. So anything where there's like, multiple different parties in the transaction, there's someone that has to receive the money and then disperse it, and it happens very slow and fragmented, especially in a global way.
Definitely. The stablecoin aspect makes a ton of sense. Wondering if you can go a little bit more into detail about how you're solving that last mile problem, because that seems like the biggest unlock for a product like this.
Yeah, it's a big unlock for sure. I mean, I think the paying side is also same concept. You partner with traditional banks. You have a liquidity engine in house that has net settlement on both sides, and then you also need to have an FX engine which you build, and then get local licensing. Which at a high level, those things sound easy, but they're pretty complicated if you put them all together and unravel under the hood. But yeah, so once you have that full stack and that blueprint, you can pretty much figure that out last mile wherever. So yeah, that's exactly what we do. We need a sponsor bank that has local rails. Let's say like in Europe, local rails are instant SEPA and SEPA. So you find a sponsor bank, you get your license, which we have. You find an FX engine. You have an FX provider. We have multiple. So I said FX engine to see which one's the cheapest of stable coins to local currency. Yeah, that's pretty much it. And then you also need to have a stablecoin issuer that can mint and burn. You have an account there. So connecting all those technologies in one, alongside like your compliance system, your tech, etc. But it's basically like the traditional fintech stack. Just you have different names of different providers. and you have to do a lot of stuff on chain, which is the hard part.
Definitely. And in terms of the markets that you serve, where are you currently, and what markets are you thinking about expanding into next?
Yeah, definitely. We have ability to take pay-ins basically in like everywhere in the world, 170 countries, and same with payouts. I would say our like where we're like excel is the United States. Believe it or not, United States payments are still very fragmented. The fintech apps have done a good job, like Venmo, PayPal, etc., to abstract the banking system. But for B2B payments and for anything that like marketplaces, for example, etc., it's still very fragmented. So like all of North America, we have amazing coverage in all the EU, and then we're seeing a lot of growth in LATAM. We have good rails there, but there's always new networks coming out, more payment rails, etc., that we're expanding into pretty quickly. So I would say LATAM is an area we're getting really proficient in. We already have a lot of customers there live. And then probably next year we're gonna do the same thing where like we have rails in Asia, but want to just make them better, more competitive pricing. Have those I kind of told you like the stack that we have, where it's like the FX providers, etc. Just build more robust ones, which then have more payment options. Speed stays the same, but it usually gets more competitive on price and reliability.
Definitely. And how are you finding, like, as you go into new markets and you think about expansion, how are you finding regulatory adoption, partnership building in these different markets generally, or are there any specific examples you can give of particularly good or difficult paths?
Yeah, they're all over and constant changing. Um, so that's somewhat difficult to it's navigate. Um, but at this point, basically every market has market leaders that have built out some sort of regulatory path and forged ahead. Um, I would say we've done that in the U.S. or one of the people. There's a bunch of people in the U.S. that have done this, but it's mainly the banks that were scared to work with crypto companies. I would say the U.S. is still probably the hardest jurisdiction to do this in, and just because it doesn't have clear regulation, and just because you can operate legally doesn't mean you can find the bank partners and financial rails to operate. You still need to convince them because there's still some perceived risk around crypto, the stablecoin industry, etc. I would say Europe has a framework. I don't know if it's a good framework. It's there, and um, which is nice. At least there's something there. I know they're transitioning to the CAS, which we're in the process of getting. We currently like a virtual asset service provider company there. I think there's a few thousand virtual asset service providers in Europe that are regulated, and now they're transitioning these new licenses to CASPs. There's only like 30 or 40 that have got issued. So we'll see. That it seems like there's regulation, but it's also harming a lot of innovation potentially, as there's a lot of barriers. And I've been dealing with it because we've explored different countries in Europe, and it's supposed to create like a passport system across the whole EU, where if you have it in one, you can use it in another. And there's some countries that still don't have a way to apply, even though this is going into effect like as we speak. So it's pretty fragmented. It's like some countries have their shit figured out, and other countries don't. It's supposed to be like a universal passport in the EU. So that's like an example of some regulatory body sets a framework, and then a bunch of the other ones don't follow it. So in these bigger jurisdictions like the EU, where there's a bunch of members countries, or the US, where there's a federal law but then a bunch of states, the left hand doesn't always talk to the right, which then gets really
Yeah,
confusing for people like us to interpret like how we should actually play by the rules.
definitely. And switching to the client side, are you finding that the majority of demand is coming from international clients or from domestic clients in the US?
Yeah, most of our demand is coming from domestic clients in the US, which is definitely surprising for most stablecoin companies. As I mentioned, we deal with a lot of like marketplaces. That
Mhm.
example I gave you at the watch, like even if it was a domestic example, like an Uber, it would still take multiple days for the driver to get paid out unless Uber fronts the liquidity and builds a payments and fintech team inside to make sure that like it abstracts the bad banking rails. But that takes like a whole payments team, and most companies don't want to have a whole payments team when they can just use a new technology like stablecoins. So yeah, domestic is a huge focus area for us because the U.S. doesn't have great instant payment rails. There actually is no instant payment acceptance form in the U.S. right now. There's like that's at least at scale, because ACH, which are banking rails, are not instant. Cards are not instant settlement for the merchants, etc. There are payout rails that are instant, like push Visa Direct, push to card, RTP, So that's like one half of the puzzle, but the other half is completely missing. Like in Europe, you have instant SEPA, and Brazil, you have Pix. You can pay someone from your bank instantly; they can receive it. US that doesn't exist, so we morphed that with our infrastructure called stablecoins to make that exist.
Got it. And you actually, Coinflow just did, well, not just did, but very recently announced a raise. Congrats, by the way. I read an article in Fortune that clearly called out Coinflow taking on Stripe, which is a huge call out and awesome. I'm just wondering if you can go a little bit more into detail about the differentiation, what you're doing that Stripe can't provide. Is it the rapid settlement, or is there more to that?
Yeah, for sure. Without like going into names, but yeah, let's like use Stripe as an example. I said marketplaces are a huge area. Um, it's been reported that like 60 to 70% of Stripe's revenue is from their marketplace product called Connect. On Connect, which is a marketplace product, if you swipe your card and want to pay someone, that same thing like it's going to take till Monday or Tuesday for on this Wednesday to the seller get their money. Um, so yeah, they just don't have the functionality to like do instant settlement globally. And when you're selling something, you want your money quicker. So we've
Yeah.
taken a lot of marketplace customers from other platforms that offer marketplace services just because the speed is very important. I'll give this anecdote, which isn't like a customer of ours, but something that's reported publicly. Robinhood, which is a big trading company and fintech, they have I think 10 or 11 lines of business that cross $100 million of revenue. One of their $100 million revenue lines is instant payouts, and that's like a U.S. business line. And all that means is when you want to withdraw, if you want to withdraw and get your money instantly, they'll charge you 150 basis points or like 1.5% to 2%. Um, or if you want to, wait 3 days, you can use ACH rails. So like Robinhood's users are willing to pay 1.5 to 2% to get their money faster and instantly, and that is so significant. Is one of their 10 or 11 business lines that hit $100 million in revenue a year, which is insane. So you abstract that and don't only use like Robinhood's example, but you like abstract that to everyone who buys anything or sells anything on the internet, and that's a pretty large business to enable those people to get their money faster. So that's really like how we're taking on different competitors, is providing something that seems easy, like it's easy to grasp, hard to execute, or it wasn't possible to execute on before stablecoins.
For sure. It's exciting to see a lot of Web3 companies building these solutions right now. I have this like lingering fear that I've had for a few years as a function of sort of the technical landscape not being mature and the regulatory landscape being unclear. It's felt a bit like we've been in a holding pattern for the last little while, waiting on institutions to build rails in. And I think that really increases our risk of regulatory capture, whereas building rails out and building products out and just building efficiencies that weren't possible pre stablecoins, pre Web3, I think ends up being the way that we persist both as an industry, but also the philosophy that underpins it. You can jump.
Yeah, no, I totally agree. It's like I think this is, last cycle for all the crypto people. So like 2 3 years ago, post FTX, like stable coins. It was interesting. Stable coins were just coming around in terms of like capturing momentum, and then FTX happened, where we saw basically stablecoins are an interesting product, right? Because you need traditional fintech players and traditional institutions to be a part of this, because people don't only have stablecoins; like, they still need to pay things in the real world, and I think that will persist for a really long time. So you need these on and off ramps generally, so people can like bring stablecoins in the ecosystem and take stablecoins out, so people can use their money in the real world. Um, After you saw this whole FTX thing happen, even though there was a bunch of builders like myself and other companies that saw like, holy crap, this technology is super powerful, those on and off ramps became very hard to access. I mean, the banks became really hesitant partner with crypto companies, regulators really on top of them, etc. So the amount of builders that could actually persist through that challenge and just get, I think maybe like 100 plus banks said no to us. Maybe probably even more, probably 200 plus. Maybe 100 plus have said no to working with us, and then like an order of magnitude higher have just like ignored crypto company, like ignored us when we were asking to work with them. Now it's the inverse, like, which is awesome. But I think that was like a huge reason that innovation can happen is because it's not, you don't only need the crypto part of this. You also need like your compliance, your legal, your financial institutions to be involved. In crypto, traditionally, it was just like, hey, build on chain, build anything. These products are, you have to touch the traditional financial system for a lot of them. So yeah, I think that this is like something that will for sure stay. People are building with intention to make this long lasting. They're using frameworks that are built in the financial services industry and fintech, etc., and not just going full like on chain degen, not listening to people. So yeah, this is like for stablecoins are for sure here to stay, and it's really good that it's melding with the traditional financial services industry. In my opinion, like it's just going to be like not Web 3, it's going to be like fintech 3.0.
Definitely. Double clicking a little bit on what you said about the on and off ramps essentially being the liminal space between the Web 3 and the Web 2 industries. How do you see the evolution of that? Do you anticipate there still being like a material distinction between what happens in Web 3 and what happens in Web 2 over the next 3 to 5 years? Or does that eventually dissolve and everything just becomes a version of a digital payment and it's sort of abstracted away all under the hood for the end user?
Yeah, it's a really good question. I think that unless there's a benefit to not abstract it, it will totally be abstracted away for the end user. Like for example, if you're trading a crypto native app and you want to see like, what tokens are in your wallet outside of just stablecoins, then yeah, like it will be explained to the user and the user will want to know that. If you're using like a marketplace and you're an Uber driver, you don't really care if you got stable coins that are USDC or USDT or whatever the stable coin is. Like your value is like you got your money, and then anything that interoperates with stablecoin, maybe rewards, maybe a card that's issued, etc., that will all be abstracted away. So anything, yeah, unless there's a reason not to abstract it, like a good reason, it will be abstracted because it's just friction to even like think about what's in my wallet. The best analogy of this is like, where are you based, Dave?
I'm Canadian, but I live in Spain right now.
Okay, you live in Spain, so you probably have used like one of those fintech neobank apps like a Revolut or something like that. Um, in the US, we have Venmo, and I always just tell people that, like for example, I don't know what bank Venmo holds my money in because it's abstracted for me. Sure, it's in the terms of service somewhere, but the FBO account in the bank that holds my money in this digital wallet, like Venmo, PayPal, Revolut, the end consumer doesn't really know. The companies sure disclose it in the terms of service wherever we accept them, etc. But like you don't really think about it day to day when you're using those apps. It's in some bank, it's abstracted away from you, etc. I think it's like the same thing that's happening with stablecoins. The users want to know that it's secured. It's secure. There should be regulations around it, so it's not like you're telling them it's a stablecoin, it's $1 or whatever it is, and it's you peg it to like water bottles or something. But generally, it's going to be abstracted away, and that's how traditional financial service apps and fintechs run today. Like the bank is abstracted, where you're holding their dollars, and same thing for stablecoins.
I think that's right. Excellent. Thank you. We're almost at time. I really appreciate you coming on today, Daniel. Very interesting learning about Coinflow, and yeah, look forward to see what's next with you guys. Where can people go to find more?
Yeah, I appreciate it. No, it's been a pleasure. Always fun to do this. People can go and find more on coinflow.cash. If you are interested in becoming a customer, you can reach out to us. Someone on our sales team will schedule a call very promptly. Otherwise, I'm always around on Twitter, Sir Digital Dan, or our company site, is at Coinflow Labs. So yeah, that's where you can find us.
Fantastic. Thanks again for joining, and thanks for everyone for joining on Stable Stories.
Thanks for having me. Cheers.
Bye.